What is up, everybody? It's Gus at Trade the Pattern. So in this video, I'm going to be reacting to Coding Jesus, why technical analysis is garbage. I originally found Coding Jesus, I believe back in 2021. There was a video of him going around on Twitter where he was actually able to fool one of these trader performance websites where you upload your account statements and then you're supposed to be 100% verified that you're true and legit. He was able to put himself up at the top of the best trader in that website. I won't mention the name of the website, but I will leave a link in the description below of that video. It is a good video to watch, especially if you're new, and it gives you an idea of how easy it is for people to fool others into thinking that they are profitable or more profitable than they are. So without further ado, let's get it going.
What's up, guys? It's Coding Jesus, and in today's video I want to talk about why I know, not I think, not I believe, why I know that technical analysis is a load of garbage. For those of you that are new to this channel, I am a high-frequency trading software engineer. I write algorithms to trade automatically, or algorithmically rather, with the exchange, and I also write trading applications to allow traders to submit custom strategies, to view their risk, to trade manually with the exchange, and that also involves creating charting software. So I am by no means new to charts. Okay guys, what is technical analysis, if you can even call it a form of analysis? Why do people believe in it, and why is it totally garbage? Technical analysis is a belief that future price movements can be predicted by current and previous price movements. Of course, the chartist will...
Okay, so this is not true at all. Technical analysis has absolutely zero predictive ability.
Fucking zero.
What technical analysis is, and we'll call it TA to keep it short, TA is just simply a tool to help you manage risk and help you gauge probabilities. That's all it is. When somebody says, does technical analysis work? The answer is no. If you define work as something that gives you results, then no, technical analysis does not work. It doesn't do anything for you. It's merely a tool. So to say that technical analysis is the belief that you're going to be able to predict future price movements based on past movements is not true at all. The only people saying this are either new traders who haven't caught on to the reality of it, or someone trying to tell you something. But again, it has zero predictive ability. Technical analysis does not help you predict anything.
Zero.
Risk management and help you gauge odds and probability. And of course, help you spot supply and demand imbalances. Previous video, you can see how to properly read a chart. So let's continue on.
Tell you that there's also MACD and volume and other indicators. It's not only price, but at the end of the day, guys, it comes to price. Okay, why do people believe that technical analysis works? The first reason is that they believe that prices are not random. The only way that you can conjecture that prices follow a trend is if you believe that prices are not random. Prices are indeed random, guys, and I'll get to that in a sec, but what that really means is that prices cannot, or future prices rather, cannot be predicted.
I'm going to agree with that. Yeah, prices are indeed random. No, nobody can predict the market. Anybody that claims to do so, it's either, again, trying to sell you something, or it's fairly new. But yeah, nobody, I mean, it's like in the movie Wolf of Wall Street. Nobody knows if a stock's going to go up, down, or sideways, etc. So that is correct. I would agree with that.
The second reason why people believe that technical analysis works is because it's simple. It plays to our lizard brains. It plays to our inclination to do the least amount of work and gain the most benefit from doing so. So what a trading guru will tell you is, hey man, just buy my course. You know, all you have to do to get that yacht that you want, to create generational wealth for you and your family, is to just look at a price on a screen, and that's all you need to know. It's that simple. You can make millions of dollars. It's just that simple. It plays that lizard brain characteristic that we have as all human beings: do the least amount of work, gain the least amount of benefit. Have the least amount of stress in my life, gain the most happiness. But what chartists will end up seeing themselves as is having the most amount of stress and the least amount of happiness. And I think it tells you a lot about an average chartist in terms of their information processing capabilities.
Okay, so when he says chartist, we're going to separate that into two categories. You have your seasoned trader who's actually proven themselves to be able to grow capital over time through trading. And then we have the rest of the population, the rest of the retail traders who are just fairly new or have not gotten through the learning curve or just simply aren't putting in the work. Yeah, it is. It does. It can. I will agree the fact that it can, especially in a good market where there's a lot of bidding going on and patterns are actually panning out and they're very easy to spot, it can't give you this false sense of generating money at will, where you don't have to put in much work. You just gotta, it's definitely not the case. Nobody, trading is, I've often said trading is the hardest way to make an easy living. There is a lot of work that needs to go into it in order for you to be able to grow capital successfully over time. It does come with work. It comes with a lot of persistence and a lot of ton of discipline. So let's keep going.
That all they do is focus on one indicator. They don't go out and research about the fundamentals of the business. They don't go and understand the market dynamic. All they care about is one indicator. Maybe they can't process a lot of information. Maybe they're too dumb to. Maybe they're incompetent. That's not up for me to decide. That's up for you to decide. But
no indicator, yeah, no doubt. There's no indicator that's going to help you predict anything either. Indicators just something that may complement your trading, but it has no predictability either. And most of them are pretty much useless. Primarily, you just want to use the basic. You're using the chart to figure out where the crowd is likely to do something. Again, I haven't made a lot of videos about this, but if you look at my previous video on the Bitcoin, you can see an idea of how to use charts and look at where the crowd is at to get an idea of what's likely to happen next, and then you're able to manage your risk.
just remember, it's all about one simple indicator. All right, guys. The third point is that technical analysis is so appealing because it involves pattern recognition. We as human beings are hardwired by nature, by God, by whatever, to recognize patterns. It is part of our evolutionary biology. We recognize patterns.
Before we get further into this point, I do want to say that, patterns such as, head and shoulders, your cup and handles and things like that, these patterns statistically do not provide any profits whatsoever. They don't provide any statistical significance. A pattern, and all it is I like to call them price formation. It's merely a small part of your chart reading. You have to add context to it, right? You have to understand how that pattern formed and what kind of environment is it in, right? But it's no secret, if you scroll through, and I personally scroll 300-400 charts a day, that there are patterns that repeat themselves. But again, they have no statistical significance for you. They're merely for you to gauge, look for opportunities, and manage risk.
In terms of danger we might feel, or that might come to us if we're in some sort of jungle situation, or if we're hunting boar. And those nascent traits remain with us till today. They're probably actually stronger today than they were 10,000 years ago. Because we nowadays still need to recognize patterns. Whether that pattern is in the workplace or in a social setting, we need to recognize patterns, and we are pattern recognizing machines. Now, what people are sold is the idea that as long as you can recognize a pattern, as long as you can look at a piece of paper with 8 patterns on it and say that one of the patterns in this ticker graph corresponds to one of these patterns, then you can make a lot of money.
This is true, man. This is very true. I see the commercials all the time. There is so much scamming going on out there, and it's very true. I've learned this one simple strategy that'll help you make X amount of money every week, day in and day out, etc., etc. There's one simple pattern. Far from it. Okay, it's pattern trading is a very tiny part of the overall career that trading is. Sometimes a pattern may work for a certain amount of time, and sometimes it doesn't.
And that appeals to a lot of people. Okay, guys, so why is this fundamentally untrue? The first reason is that prices are indeed random, which means that prices cannot be predicted. Prices are indeed random in the short and medium term. Read the book A Random Walk Down Wall Street. There's something called Brownian motion. It is a stochastic process, which means in the short and medium term, prices are entirely random. Okay? You won't find any trend in the 1 second chart. You won't find any trend in the 5 minute chart. You will not find any trend in the daily chart. You will not find any trend in the 2 week chart. The only trend that people...
I'm going to have to disagree with that. You'll definitely find micro trends within each time frame. The entire time frame situation, it's pretty much fractal. The same patterns you'll find in a monthly chart, you will find in a weekly chart. You will find in a daily chart. You'll find in a 1 hour chart, 10 minute, 5 minute. The difference is reaction times. Can a stock trend all day in a 5 minute chart? Yes, it can.
Or not people in general, retail investors have consistently made money off is the long-term trend. And the long-term trend is not tradable. Therefore, it does not appeal.
I'm going to agree with that. The longer term game is the better game. However, that doesn't mean that you can't consistently make money trading short time frames. You can. Each discipline, whether you're day trading or you're swing trading, few days out, few weeks out, few months out, few years out, is going to have their pros and cons.
To day traders, because they are focused on changes that happen within the day, within maybe a 2-day.
Another thing I like to add is the longer the time frame, as I said in my previous video, larger time frames dominate. The larger the time frame, the less it is prone to manipulation. If you haven't read Dow Theory, I highly recommend it. I'll leave a link in the description below as well for you to read. It's a free resource. I'm not affiliated with them.
Maximum within a week. They are not focused on changes that happen over a year. And the retail investors that make money on the stock market primarily buy and hold. They are there for the long-term trend, not the day, not the minute, not the hourly, not the 2-week trend. Okay. The second reason, guys, plays on that simplicity point that I mentioned as to why people are drawn to technical analysis. People that trade technical analysis only focus on price, or rather primarily focus on price. They believe that previous prices can predict current and future prices.
Again, this is not the case. A seasoned trader does not believe that a previous price movement is going to predict a future price movement. It's not the case at all. We're merely looking for scenarios where something's likely to happen. We're simply looking for high probability scenarios where we can put our money to risk. It's not the case that a seasoned trader believes that we're trying to predict price movement. Any seasoned trader will tell you, I don't know. I don't know what price is going to do. Here's what's likely to happen, but I don't know.
They have it entirely backwards because they do not understand how price works or what even is a price. The fundamental underpinning of technical analysis, they do not understand. They do not understand what a price is. A price is a subjective valuation of a given commodity based off the expectations of that commodity's future cash flow. The current price is an estimation based off future cash flow, and the future price can...
It's true. The markets are, in a way, it's true. The markets are a discounting mechanism. Everybody is betting, making bets based on future beliefs, future expectations.
Cannot be predicted based off previous prices. The price I'm paying...
I also want to add that there's an old saying that says, history doesn't have to repeat, but it often rhymes. And that is the case. Like, there are several events that have happened in the past that may happen in the future again. Let's say, for example, all the virus stocks, right? If we have another pandemic, traders are likely to flock to the same stocks or stocks that are related to the pandemic to find an edge there. It doesn't have to repeat, but in some cases it does.
Today for a given asset is the sum of the discounted cash flows that asset will generate for me in the future. The price I'm willing to pay for a house is the discounted rent that it will yield for me in the future if I buy it today. It's all about discounting the future till today. But what technical analysts or chartists want to tell you is that they can inverse that. They have it all backwards. They inverse that the past can predict the future.
Here's the thing, man. Those aren't technical analysts.
That's not what price is. Price is a signal of future expectations for a given commodity. How much that commodity will make you in the future. And that's why people like Warren Buffett look at discounted cash flows for a given commodity today to price it. To understand what it's...
Not sure why he brings Warren Buffett. It's a completely different discipline. He's a value investor. We're talking about trading. We're talking about technical analysis. Value investors do not use technical analysis.
Future price might be given what the future will yield for this business. Okay. The third point, guys, relates once again to the pattern recognition part. Human beings, like I said, are pattern recognizing machines. Now, why is technical analysis bunk? Because you can give the same chart to two different people and they will see different patterns in that chart. And those patterns will yield radically different conclusions as to the direction of that price. So one person will tell you, okay, I see a cup and handle or whatever, it's bearish or it's bullish. Another person will say, oh, I see a head and shoulders, so it's bearish. How can you reconcile the two positions? You can't. That's because human beings will read into the chart whichever pattern they want to see.
There's some truth to that. I'll agree with that. Yeah, two different traders can interpret a chart two separate ways. That's not necessarily irrelevant because we're talking about what is a cumulative, what is the overall market looking at perceiving this particular formation as. And where are they likely to chase that formation? Meaning, where are they likely to start buying it? Or, i.e., where are they likely to start panicking, right? In a way, I'll agree. So let's keep going.
Okay, they will read into the chart what they want to see, and that's how they will make their decisions. You can take this.
Yeah, that's what I was trying to remember. It's called confirmation bias, right? You know, especially as a beginner, you are going to see what you want to see, especially if you're already in that position.
Same chart, flip it 180, and the person looking at that chart will come to the same conclusion as they did if that chart wasn't flipped. The same exact conclusion. Okay? So human beings will read into the chart whatever they want to read into it.
That's also true. I mean, that's we'd likely in some cases you can flip charts upside down to see if there's a bearish scenario, is it likely to break into a bullish scenario and vice versa. But again, we're not making decisions necessarily on that. We're just trying to get an idea where the opportunities are at, what is likely to happen next, not trying to predict what's going to happen, which is a completely different thing. We don't need to know what's going to happen next.
And furthermore, if everybody's reading the same pattern, then everybody should theoretically be making money. But that's not the case. Even if it was true that everybody's reading the same pattern, the mere fact that everybody's reading into it will mean that profits in the space will gradually dry up. Okay? Because people will see that signal and some people will act before other people, and so some people will be crowded out of that opportunity.
Not necessarily. I mean, not everybody's going to act the same way. Not everybody's going to be buying the same amount of shares. Not everybody's going to FOMO into a trade at the same time, unless you're talking about a very illiquid trade. So let's keep going.
Opportunity. Okay, guys. The fourth point is that people think that technical analysis is legitimate because brokerage firms will issue reports on technical analysis. Guys, brokerage firms couldn't give two shits about you.
That's true.
The fact that brokerage firms issue a technical analysis report doesn't vindicate you. It doesn't mean that technical analysis works. Me working inside a proprietary trading firm,
Yeah, those reports are worthless.
know the psyche of exchanges, the psyche of institutions that want you to trade on their platform. They want the most liquidity and the tightest bid and offer spreads, and they want to generate the most volume so they can get as many fees out of you as possible. So, if that means that pretending technical analysis works, sure, why not? They'll feed you bullshit as long as you eat it up if they're going to make money off it, and of course it's not illegal. So the mere fact that brokerage firms issue technical analysis reports is by no means a vindication that technical analysis actually works. And the last point, guys, is cold, hard facts. There are plenty of empirical studies. One is, I believe, called Noise Trading and Illusionary Correlation in the US equities market. And what that report pretty much says, an empirical study, is that the head and shoulders pattern, that's what they were analyzing in particular, does not yield any profitable trading signals in the long run.
That's true. They don't. They're merely, again, I like to call them price formations. Take a look at the previous video I made so you can see exactly how a chart should be read. And at the end of the day, you only know about the pattern until after the fact. So,
not predictive of future price movements. All it's predictive of is volume. And what that tells me is that a lot of chartists see a head and shoulders and start taking positions,
yeah, I mean, you should never take a position just because of something formed. The word that's being used is predictive. There's nothing to predict. We don't predict. Seasoned traders don't predict. They gauge odds and probability. Is it cloudy outside? So it's likely to rain, right? If it's cloudy outside, it's likely to rain. Is it start thundering? It's likely to start raining. Is it possible that the sky clears out and the sun comes back out? Yeah, it's possible. But it's not as likely as it is that it's going to rain. That's just the basic gist of it.
If it's bullish or bearish or whatnot, they start taking positions. So
yes, amateurs will start taking positions just because something formed. Not a seasoned trader.
If you don't want to listen to anything I said, the empirical data is there to show that what I'm saying is true. And if you want to doubt the empirical evidence, that's another question for another video. I mean, you can go ahead and do that. But most likely chartists aren't going to read that empirical information because they're only focused on one piece of information, and that is price. Okay, guys, thanks for watching this video. If you liked it, give it a thumbs up. If you hated it, double tap thumbs down to show me just how much you hated it. And subscribe to this channel for more videos, the latest and greatest in coding Jesus, so you can hear my gospel first.
This guy's good. It's funny. So yeah, there is, there's some truth to what he says, but of course, again, it all starts with this whole belief that technical analysis is going to help you predict something, and it is not.
Zero.
Again, it is just a tool. Anyways, that about wraps it up. Leave a comment below if there's any specific topic that you want me to cover, any video you want me to react to, any chart you want me to look at. I want to start doing Wednesdays where we do chart rating lessons. I have everybody submit charts, and then we'll start charting them together, and we'll just start taking a look at and see where the opportunities are at. I'll leave a link in the description below. Please reach out to me if you want personal coaching, and until the next video.